In this video, I want to show you how you can get lower time frame entries after you have determined your daily candle bias. Okay, I made a video before this one on daily candle bias, and many of you asked, after determining your daily candle bias, how then would you be able to get lower time frame entries? I saw that on the comment section. Several of you asked that question. That is why I'm making this video today. So if you're yet to view the previous video on daily candle bias, please kindly do, because that is the first video about this, and that will serve as a foundation to this video. Okay, you need to know how to determine your daily bias before you can know how to do the lower time frame entries. That is why I'm making this video. So the aim of this video is to show you how to get lower time frame entries after determining the daily bias for the day from daily time frame. Okay, so please view that video if you're here to view it. Okay, now there are types of daily bias. I mentioned in the previous video that there is continuation, which can either be bullish continuation or bearish continuation, or reversal, bearish reversal, bullish reversal, indecisive, okay, indecisive bullish, indecisive bearish. So I've made all of these, so please refer to the previous video before this one for in-depth explanation. So we are talking about the entries, the take profit, and the stop loss rules. Entry, take profit, stop loss rules. So now this is going to be on different types of bias. Okay, for the continuation daily bias, you need to mark the intersection of the previous day's candle close and the wick or body close of the current day's candle, just as I made as we get our entry on the one candle strategy, one daily candle strategy. Okay, for if you have yet to view my videos, I've made about 3 videos on the one daily candle strategy. So that is the similar strategy, similar way you're going to get your entries for the daily bias. Okay, second thing you need to do is to step down to your lower time frame and identify a supply zone or demand zone around the intersection area that I've just mentioned between the previous day's candle close and the current day's wick, okay, or body close. So now enter the trade when price pulls back to the zone after you've used an smart money entry confirmation strategy. Okay, now for the take profits, you can target 1:2, or you just target the previous day's candle high if you are actually buying, or the previous day's candle low if you are selling. Okay, so now the next thing is now place your stop loss above the entry zone for a sell scenario, okay, or below the entry zone for a buy scenario. Now, how do you get entry confirmation for the reversal and indecisive daily candle bias? So for the reversal and indecisive daily candle bias, so what you just have to do is to simply look for a valid supply or demand zone on a lower time frame which falls within the range of previous day's high or low in the direction of the daily bias, which is either bearish or bullish or bearish. So do not be afraid. I'm going to show you on the chart exactly how this works. Okay, now for the bullish continuation, bullish continuation bias, you already know from the previous video that I said that if price closes above the previous day's high, price action will likely attempt to surpass the new daily high. This is it. You know about this. We discussed this on the previous video, and we want to look for a candle here. How we're going to get our entries. Okay, now this is what you actually gonna do here. This is your previous day's candle, this is the current day's candle that is forming. Okay, it is forming at this point. Okay, it is actually forming. Okay, so what you're going to do, you mark the previous day's candle close. For a bullish candle, this is the close up there. So you mark this point and you just wake up in the morning around 6 a.m. for you are looking at the time frame at timing from 6 a.m. to 8 a.m. or 6 a.m. to 8 a.m. GMT or London time, 6 a.m. to 8 a.m. London time or GMT is when you're going to do this. Okay, so around this portion, this is the intersection of the previous day's close, candle close, and the current day. This is our current day. Okay, this is our current day. So the intersection of the previous day's candle close and the wick of the current day. Sometimes the setup could extend to this point. Sometimes you can get set up to this point. You do not get set up below this point. Okay, but most likely here, as I've said in my previous videos on daily candle, so you get look of your setups here, and then what we're looking at is this candle is forming. So we are looking at having price pull back to this zone and give us an entry that will buy. Okay, now let us see on the chart. So look at this chart. This is a USD card chart. All right, this is USD card chart, and we have this is the chart. So here we marked this point. This, assuming this is you can see this candle 1, 2. All right, so this is your previous day's candle, and this is maybe your current day's candle. So you mark the intersection of the close, and here, and the body close or wick. Here, this candle does not have a wick. All right, this candle does not have. Some of you are asking me, what if the candle does not have a wick? So it's not a problem. Just mark the intersection of the previous day's candle close, and now the body, just a few pips around the body close if there is no wick. So here is where we're going to look for setup. We want price to sort of reverse down here and then give us a buy. Now for a TP, we are targeting this high of the previous day. The price will most likely will smash the high of the previous day. So these are our take profit targets. It could extend further than that, but no problem. This is where you're targeting our 1:2 risk to reward ratio. Now your stop loss will be somewhere around here. Okay, if you use your XMC trading smart money confirmation method, your stop loss will just be slightly below your entry zone. Okay, all right. So I've made previous video on smart money entry confirmations method. For some of you who don't know how to get smart money entry confirmations, please refer to my previous video on that. All right, as a smart money trader or demand and supply trader, I don't really actually use all those retail methods of stop loss placing and all that. But that is not to say it's not okay, but there's a better way of doing it, and I've made a video on smart money entry confirmation method. So now let us go. You see here, now we have shaded this point. This is where we're looking at getting set up. Here where we're looking at getting set up. So let us go down to lower time frame. On lower time frame, you can see where we mark on USD card. This is where we marked. This is the zone we marked, and this is the intersection of the previous day's candle close and the body close of the current day, since this current day's candle does not have a wick. Okay, so we are looking to enter around here, and to get your entry, you step down further. This is 15 minutes time frame. Let's step down further to M5. All right, at M5 we can see here that there is a change of character right here. There's a change of character, and price returned to the order block and gave me a zone. So this is my refined stop loss here, and this is my stop loss distance. All right, which is about 10 pips most likely. And here I can take my first profit, take profit here at 1:2. But most likely this is the previous day's candle high, so you should most likely target this point. Price would most likely hit this point. Okay, so that is actually it. So you can see here, price smashed it. Okay, price smashed that point. Okay, so that is for a bullish scenario. Now for a bearish continuation scenario, we say that if price closes below the previous day's low, price action will likely attempt to surpass the new daily low. And you can see here that since this body closed below this low, all right, this is your day 1, day 2, and day 3. Price, this is your new daily low. Price will likely smash this low. So we are looking for a sell scenario, and what you're going to do is here you mark the close, candle close here. Okay, you mark the candle close right there, the candle close of the previous day. This is your previous day. They mark the candle close, and your setup will be around here. Okay, you're looking at taking a sell trade from here. Price would most likely go to mitigate a zone, a supply zone here, and now sell. Your stop loss will be somewhere around here for if it is unrefined stop loss, but you need to target this point. This daily low for the previous day would most likely would be smashed. Price would get to that point, even though it might extend further, but this point price will most likely take out this previous day's low. Okay, now let us see on the chart. Now this is Euro USD daily candle, and now let us mark. So here, this is our previous day, all right, and this is the current day. Okay, now previous day and current day. Now I've marked the intersection. This is the intersection of the previous day's candle close and now here price, I'm expecting that price will come here or here as well. Okay, price could either come back to mitigate this zone and sell, or come back to mitigate this zone and sell, any of them. But price, do not trade. I've said in previous video, do not trade if price breaks below the previous day's high. Okay, do not bother trading. So but here, this is a valid setup. Here as well, this is a valid setup. I share this setup on our Telegram community. If you're here to join our Telegram community, please do not fail to do so. The link is in the description box of this video or the profile section of this YouTube channel. Okay, so I marked this. If you're in our Telegram channel, you're going to see that this is a trade that we took this week. Okay, now you see, I pointed out to my people that price would going to come here. It's going to come here to sell, or come here as well to sell. That is just here, just these two zones. Okay, these two zones, and this is the continuation daily bias continuation. Okay, so now let us see what happened. You can see here that it actually happened as I said. Price came for the first zone, all right, and our stop loss will be somewhere around here after we have gained our entry after the mitigation, and then the previous day's low will be taken out, giving us our take profit. Okay, now let us see. This is a 15 minutes of that, but I want to show you on 5 minutes. On 5 minutes is mostly where I get my entries, my confirmation to entries. I get my confirmation to entries on M1 or M5. Okay, all right, so there are more things I need to show you about trading. I've been in trading for years. All right, I've been in trading for years. For me to be releasing these secrets that people charge a whole lot of money to show, to teach, shows you that I have got more. I've got more. There's more from where this comes from, but you need to show me some support. I want to thank you especially, all of you, my loyal subscribers, for taking us to 10,000 subscribers. Now let us take it further higher. How can you help? Subscribe if you're yet to do so. Give this video a thumbs up if you are benefiting and getting value from this video. Also, comment on the comment section. Let me know how you feel about the video and what more video you want me to make for you. And as well, share this video with your friends, other traders who are struggling or who wants to better their trading career. Let us take this channel higher to even 100k subscribers in no distant time. Okay, so now we get my entry confirmation. You see here, there's a break of structure, there's a exchange of character here. Just briefly, just a slightly change of character happened here, and price went right up, gave me an entry, and now sold. Gave us an entry here, sold. We place our stop loss just above. All right, so now and you can see how that played out. You see how that played out, and it was a wonderful trade. In fact, even after we left the trade, price continued to sell further, but though we took out our funds and price sold even further. Okay, I share this on our Telegram channel. Okay, so please don't join our Telegram channel if you're here to do so. Now for the reversal, now we have to talk about the reversal and then the indecisive daily bias. Okay, for the reversals, we can be bullish or bearish. For the bullish reversal, we say that if price fails to close below the previous day's low, price action will likely reverse and try to take out the new daily high. Now this here failed to close below this low. All right, in that case, we are expecting a bullish reversal. Okay, now what you're going to do to get your entry, now this is your day 1, this is your day 2, so your entry will be somewhere around here. Your entry would be around anywhere around here. Just locate a zone, locate a demand zone from around this. Okay, around this, just locate a demand zone from around this point, a valid demand zone, and wait for a pullback. If price pulls back into any zone there, trade it up, and you target this high, because this high will most likely be smashed. Target this high as your take profit, but you can as well take out some profit at 1:2 risk to reward ratio. Place your stop loss just below the demand zone from which you traded from. For a bearish scenario, we say that if price fails to close above the previous day's daily high, all right, price action will likely reverse and try to take out the new daily low. And this is what we actually mean. This is day 1 and this is day 2. Now this daily close here, this is the daily close. It failed to close above this candle. All right, fails to close above this previous day's high, and for that reason price is likely to reverse. Okay, so that is what you see here, price reverse. So how do you get your entry? You look for a supply zone within these previous days, within the confines of the previous days high and low. You're looking for your entry within the confines of the previous day's high and low. You're looking for entry here. Okay, you're looking for entry around here. On your lower time frame. I didn't know the candle bias. We know that it's going to be a sell because of this candle failed. This body failed to close above this. All right, so since this body of the previous day's candle failed to close above this previous day's high, so it shows that the market for this will reverse. Okay, and we get our entry on within the previous day's high and low, a supply zone that appears within the previous day's high and low of the previous day's candle. All right, on a lower time frame. Now for the indecisive, if price fails to surpass the previous day's high or low, target the previous day's high if previous bias was bullish. Okay, now we said that here this candle did not close above this previous day's high, and this candle this week this candle did not close below. It did not close below. So what would now be this daily candle? I'll use this as my bias. All right, that is what we said. So but in terms of entry, your entry will be from here. Will be determined by your immediate past. Though the bias is bullish, the bias will be bullish, but your entry, you use this candle as your entry. On a lower time frame, you look for a supply zone on a lower time frame from which you're going to trade from, and see. So this is where we are trading from. If you go to lower time frame, you're going to see that there is some sort of a demand zone that appeared from where this candle took momentum. All right, from where this candle took momentum and bought. So you have to go to your lower time frame and identify a demand zone, a valid demand zone within this range, this previous day's range. Listen to me. Your bias is bullish because of this candle, but your entry is determined by this candle. It falls within the range of the immediate previous day's candle. You look for a demand zone within the confines of this previous day's candle. Your daily bias will be bullish because of this. For the indecisive, if price fails to surpass the previous day's high or low, target the previous day's low if the previous bias was bearish. Okay, what do we mean here? This candle here, price failed to close above this and to close below this. So my bias will be determined by this. This will determine my bias. Okay, this candle will determine my bias. So we're going to have a bearish bias. Okay, it's going to be bearish, but then my entry will be determined by this candle. My entry will be looking for a supply zone within the confines of this immediate previous day's candle. Will give me a supply zone. Okay, I'm going to look for a supply zone. I'm going to trade from within the previous day's candle range on a lower time frame. Okay, I hope that is clear. So here, this is going to be where I'm getting my entry from. Okay, there should be on a lower time frame zone within this range or the immediate previous day's candle, even though my bias will be determined by this candle. Okay, now I'm targeting this low or this low as my take profit. My stop loss will just be above the zone on a lower time frame from where I took my trade. Okay, so this is basically about your entry. Okay, take your time to view this video. If you view it the first time, you might not understand clearly. View it again.